Good afternoon to all the panelists, chairman, ladies and gentlemen. I've seen the hands up for the SEZ unit and SEZ developer, and there are lot many those who are looking for what is this export and SEZ we are talking about. I can tell you in simple one line, if we talk about SEZ and export, what need to be done in any country, including India, whatever taxes is being charged should not be exported. Am I right? Are we getting the similar benefit? Let me take the challenges one after another, and I want you should participate with me. I want this should be your presentation. Maybe I will take 3 issues or 4 issues within the time frame given to me, but I want you should come back to me. The first one, I'm a supplier. I'm supplying goods or services to SEZ unit. I have 2 options. I can supply on payment of IGST, and I can take disclaimer and go for refund. Or I can export, I can supply to SEZ unit or developer without payment. On the basis, I have executed my LUT. Am I right? Tell me which option you'd be looking for. IGST or without payment? Without payment, right? Look at the problem now. If I'm a supplier and you want me to supply without payment, then what is the problem coming to me as on date? Let's say I got my 50 rupees inward supply and 18% GST rate applicable. So 6 rupees on input, 1 rupees on input services, and 2 rupees on capital goods. So 9 rupees ITC lying with me. If I export to you at 100 rupees and 18% applicable, so IGST would be 18 rupees, am I right? Then I will be allowed to adjust my 9 rupees ITC and I will pay 9 rupees in cash. But I will get 18 rupees back as my rebate or refund. But if you ask me to supply without payment, then what happened? I got 9 rupees ITC, am I right? Will I be allowed to get 9 rupees refund from the government? 2 rupees capital goods credit is being denied in my hands when I supply without payment of IGST. Are you listening? So when same parameter, export or supplies to SEZ unit are 0 rated, either it is made on IGST or made without payment of IGST, why there is a disparity for capital goods credit? And why such supplier would be willing to supply on without payment option? First, law need to be checked in. Second option. Second, critical issues. Let's say I'm having head office in Delhi. Head office in Delhi. I got my branch in US. We are talking about IT and ITES, right? Such a big sector as on date, exporting services. Head office in Delhi, US is my branch. My branch got client in US. Now they want to serve to the client, but they're not having enough manpower. They requested HO Delhi to serve to the client in US. So I'm going, at the instance of my branch, US branch, serving to the client in US. So I'm going to raise my invoice to my branch in US, am I right? And branch is going to raise the invoice to client in US, am I right? Tell me whether my service, HO service to branch is export of service. Please, apply your mind and say yes or no. It is not export. It is not export. What the export of services provisions are? Supplier must be in India. Recipient must be outside India. You must have received money in convertible foreign exchange. Place of supply must be outside India, but you should not be merely establishment of distinct person. So HO and branch becomes merely establishment of distinct person, even though services rendered for client outside India got paid in convertible foreign exchange, it is not export of services. Reverse case, let's assume reverse case, you're taking services from branch US to HO in India. It is not export when I talked about export. What happened reverse case? You're taking services from your branch in US. HO is taking. Whether reverse charge applicable? Answer is yes. So it is not export on one hand, but reverse charge applicable. Third case, critical case. Let's say I'm a commission agent in India, in Delhi. The foreign supplier, let's say in Korea, requested Bimal Jain, Mr. Jain, can you find out Indian market for me? I have found out the market for my foreign supplier, identified the customers. Now this foreign supplier is sitting in Korea, supplying goods directly to the customer in India. Am I right? And they are clearing the goods by filing bill of entry. I'm being paid a commission by whatever name called. Whether that is export of service, because I have given this service to my foreign supplier, is it export of service? Say yes or no. It is not export of service. And this provision applicable from 1st October 2014, this provision got changed in service tax era and copy-pasted in GST regime. Okay, just listen. Look at the interesting part. Time is short, that's the reason I'm running fast. It is not export. I will charge 18%. Who will bear this 18%? My foreign supplier will not get any credit. I will become incompetitive. I will give my business to Bangladesh, Nepal, Pakistan, and Bhutan. This is one case. Look at the reverse case, Let's say I'm in Korea. I'm a foreign commission agent. Now, Indian supplier wanted to get market in Korea. Am I clear? So I'm in Korea. I'm identifying customer base in Korea for Indian supplier. Now this Indian supplier is giving me some amount, say commission, with a reverse charge applicable. Reverse charge, you understand. You have taken services from a supplier outside, reverse charge applicable. No reverse charge. So first case, you are earning foreign exchange for country India, GST applicable. Second case, foreign exchange going out of the country, reverse charge, not applicable. Coming to the fourth case, maybe I will take two more, sir, within 7 minutes. Two more cases. We were talking about SEIS and MEIS script. Am I right? Advantage. What is advantage? You can use such credit script for payment of basic custom duty. Am I right? And it is transferable from me to you. I can sell. Any GST implication? Any GST implication? What is? Initially it was 12% taxable, later made 5%, then later made nil. Nil is exempted. And once it is exempted, repercussion of reversal of ITC, input tax credit on exempted will come. So what advantage we are giving when we are talking about export? SEIS and MEIS, it should be taken out from exempted list so as I'm not required to reverse credit. Come to the fifth one. Now let's look at the broader aspects. Sir, here I want to invite your attention also and all the panelists here. What is the objective of Make in India? Promote Make in India, am I right? I need your attention. Maybe 2 minutes you can listen to me and get a broader perspective why I'm raising this point. Our Honorable Prime Minister has said Make in India as against import of goods, right? And you have recently seen the Balakot issue and the China are not supporting our contention and we started shouting, stop Chinese import. Am I right? Now look at the irony of this country today. I just want you to take to pre-GST era. When we were importing goods, we were paying basic custom duty, CVD, custom cess, and SAD. Am I right? And if you're a manufacturer, then you are allowed to avail credit of CVD and SAD. If you're a trader of imported goods, you're allowed only SAD refund. That too specified goods. And if you're a service provider, you're allowed to avail credit of CVD only, right? This was the pre-GST. From 1st February 2018, what is the structure now? Basic custom duty, social welfare surcharge, IGST, and compensation cess if leviable. Now look at the difference between manufacturer and the trader of imported goods. Now, if I'm a manufacturer and my friend is importer of same goods and trading in such goods in India, we both are getting the same advantage. We will pay basic custom duty, social welfare surcharge, IGST, and IGST credit available to both of us together. But pre-GST, trader of imported goods was allowed SAD refund only 4%, as against CVD and SAD credit in the hands of manufacturer. So manufacturer was protected against import of goods. So what happened? Are we really supporting Make in India? Coming to the last conclusion point, I will not extend further. We are talking about SEZ, global economic zone, export, import. Time is paused for me, but only the thin line which I want to draw here. We have seen in recent time getting refund from the department side. And I posted a query whether if I'm looking for supply, and that to SEZ unit, you would be preferring to get without payment, but supplier is at disadvantage not to get refund of capital goods. Right? Why we create such disparity? Why such confusion? Coming to the advanced ruling, one advanced ruling only, one advanced ruling. You are SEZ unit in Delhi. You come to my Le Méridien hotel, let's say Asoka Hotel, this is my hotel, and you take accommodation services. Tell me GST applicable. As per law, if supply made to SEZ unit, it should be 0 rated. Am I right? Say yes or no. 0 rated. So whether it is 0 rated or taxable? Tell me, 0 rated or taxable? 0 rated, but advanced ruling has concluded, no, it is not 0 rated. It is taxable. And second question, whether this should be intrastate or interstate. Tell me, intra or inter? I'm in Delhi, Asoka Hotel in Delhi. You have come to my hotel availing services, intra or inter? It can't be intra. Section 7 is the Bible of IGST Act, talks about any supply to SEZ unit or developer, it's an interstate supply. What advanced ruling concluded? It would be intrastate. And then try to understand, advanced ruling authority going extra mile and concluding something which is not as per the law, a circular comes out and say, no, advanced ruling authority, you made mistake. It is 0 rated and interstate, overruling the advanced ruling judgment without appellate authority decides. So litigations are pipping up. What is authorized operation? I'm a SEZ unit. Whatever input service I'm taking, it is meant for my authorized operation. I cannot offer coffee and tea in my operation unless you work in SEZ unit. It is my customary process. I need to offer it to you and should be used for my authorized operation. You can't be. There are 66 services. We talk about known services for authorized operation. And that endorsement from the officer, it is creating, boil water in our minds. I can only say with one last line to sum up my presentation. My other colleagues have said SEZ benefit and advantage. I started with the critical issues. I could have carried on giving 10 more. Time is a pause. But it is not in my interest to criticize. It is only constructive suggestions. To whom? To the government. Make it really ease of business for the objective of providing ease of business. Let export prosper. And export will prosper only when tax implications are taken away. Taxes should not be exported. So with this, let me say thanks to each one of you for giving patient listening. Thank you very much.